Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net, SeekingAlpha.com contributor, coming with the weekend stock market wrap-up. First thing I want to say is I hope you guys all got to see the Dallas Mavericks and Denver Nugget game today. That was amazing. What an ending. Congratulations, Denver. Wow. Incredible. Anyway, that's why these videos are coming late, because of morning errand list and basketball. Still, at least it's up before Sunday. So anyway, let's get a start and look at the NASDAQ and show you some areas that I'm watching. First off, if you want to, you can draw this trend line of the NASDAQ around the lows. And if you do that, you can see that that uptrend that I was letting it go through, it broke down from it on Thursday and still has not gotten back above it. At the same time, the 50-day moving average, or the 200-day moving average, excuse me, has now become resistance again. It went from resistance to maybe support, back to resistance. So we've got to watch the market there. If it gets back above this trend line, everything will be back to being okay. If not, then that means that these series of highs will be when we can expect another area of support down there. So that's right underneath the 50-day moving average. So if it, oh man, that was a badly drawn trend line. My apology to everybody. Let me connect this to this I'm going to get all the trend lines up that I want there. So that's right underneath the 50. And then here's another one that I'm watching the 2008 lows connected across all the way out. If I do that, now I've also got resistance above the 200-day moving average. So these are all important areas for me that I see them on myself. Another thing that you could do the Fibonacci, which I've not set up correctly here. You could do the Fibonacci retracement from here to the lows there and see that the market could pull back to any of these lines. Let me go expand it so it looks a bit better. So the NASDAQ could pull back to any of these support areas that you see here. Maybe I'm right. Maybe this is the, what is, I haven't done Fibonacci in so long. Is it 33, 50, 66%? I can't even remember anymore what lines I got here. Wow. Okay, time to re-up myself on Fibonacci retracement levels because I've completely have hit a brain fart. I thought I was 33, 50, 66, but I know you can throw in a 75 and 25 in there. You can do whatever you want with Fibonacci retracement levels. However, a good support area you could look for is, like I said, the 33, 50, 60% retracement. Those Fibonacci lines will draw up pretty nicely. Actually, let me go and do that again because what I want to do now is get rid of maybe some of these if I can. Can I get rid of any of these? No, I can't. Okay, so I'm just going to go and get rid of them because the Fibonacci lines are not coming in how I want them to come in. Next, let's take a look at the New York Stock Exchange. Now, one of the things I also want to tell you. Now, look on Thursday. See the sell-off on Thursday that we had on the New York Stock Exchange and the NASDAQ? Notice how volume was heavier on both of those indexes? The last time NASDAQ had a big sell-off, it had it by itself. Going back to the New York Stock Exchange, as you can see on that same day, lower volume. And the last time the New York Stock Exchange had big volume, it had it by itself. So the fact that the volume was heavy on Thursday on both markets tell you that somebody was selling them all. They were selling everything that they had. They didn't just sell the NASDAQ stocks and the NYSE stocks, they sold it all. So that's something that I'm going to keep my eye on, as I think that's very, very crucial to this and how we rebound. New York Stock, NASDAQ, we could base around a lot here, but I saw a lot of charts get damaged off just the one-day sell-off on Thursday. And that's never good to see your charts actually get hit on that sell-off. The S&P 500, back to new highs with the NYSE, of course, but on lower volume. However, the fact that it's at new highs, that's bullish. However, why are my charts not looking as pretty as they should be by now, man? That's like a big red flag to me, guys. We've got a lot of nice stocks off the lows, and if you get them right off the lows, you make a lot of good money, like DRYS if you got here, and you then sold it for a 20% gain. You know, you got a 44% gain if you sold in a few days. You look at Ford. If you bought Ford off of its, let's say, breakout right here on strong volume, you got a 92% gain so far. So the ones off the lows are doing great. However, some of our big winners like ASCA is the only one that's acting right. This is how most of my big winners work, okay? The 50-day moving average is above the 200-day, and price is above the 50-day moving average. This is historically how all the greatest stocks have acted for me. Just go look at my past big winners, for God's sakes. I mean, those kind of gains. How many of you guys have ever gotten those kind of gains before? So I'm trying to show you how you can get these kind of gains. So just because the market's not working right now with what I've always used for my entire past 14 years doesn't mean that it's stopped working. It just means it's not working right now. What if I would have thought that in 2002 it stopped working? Oh boy, I would have missed everything in 2003. I would have missed Apple, ERS, DSTI. I would have missed GIGM. I would have missed AFSI, TESO, HRZ, RMTR. I would have missed all of those from 2004 to 2007. And then all the great 500, 600, 1,000, 2,000% winners in 2003 had I not believed it. However, ASCA is how it's supposed to work. And as you can see, in 1, 2, 3, 4, 5, 6, 7, 8, 9 days, we're up 48%. Now, I've taken about 20% off. However, when it's up over 20% in 2 weeks, you're supposed to hold it for 8 weeks. However, in this market, I don't know if you want to do that. So we'll look for other topping signals to get rid of it. But I would like to hold it for at least 5 weeks, now that especially the green bop's rising and that the chart's actually working perfectly. However, at the same time that that's happening, we have other longs that I don't know if I should show, and actually I don't think I am. So let me think of a stock that, let's show you some Can Slim stocks that have been failing. TSYS. This stock was looking great in its uptrend. It was looking nice and solid. And then all of a sudden, roll over. Ugly. Netflix. Roll over. Shanda Software. Market's been rallying recently. Why is Shanda going down? Market's been rallying recently. Why isn't NTS going with it? So NTS is the best one out of all of them that I'm not long that are Can Slim. But TSYS, Netflix, Shanda with top fundamentals tell a story that maybe the market's weaker than it actually looks right now. And if you look at the NASDAQ relative strength line, look at this thing just destroy itself. So, since the 30th, 1, 2, 3, 4, 5 days, 6 days, the relative strength line has broken through the recent lows in April. Right here. Go all straight across. See how the relative strength line's in a new low? Look at the April lows. This is called negative divergence. Whenever the price is above the support area, but the relative strength line is not, that's showing you that the market's weaker. The leading market is weaker than the overall market, which is the S&P 500, as you'll see via the flat line. Now, at the same time of looking at all that, I want you to look at the leading indexes, if we can pull them up in enough time. Markets. I don't know if we're going to have enough time because my computer's been up for days and days and days. Okay, we do. IBD 100 index. Look at what it did today. It was up 1%. However, that's lagging the market again. Look at the relative strength line. Hitting new lows while price continues to hit higher lows. This, my friends, is a major negative divergence. From the November lows, while the market rallied, IBD indexes did not come along. And if you guys don't remember what they can do, by the way, here's the IBD 100 from 2003 to the 2007 top. So you can see it goes from 100 to 380. 100, 200, 200, 380. So that's going to be like right around 280% gain. I have a question for you. Was our stock markets up 280%? No. So obviously you can now see also via the relative strength line that the relative strength of the IBD 100 and IBD 85 was much stronger, hence the huge price gains from 2003 to 2007. 100 to 380, 280. And then also at the same time, IBD 85, here's a monthly chart. Look at the relative strength line. While it was going up, what was the relative strength line doing? Rolling over, rolling over, rolling over. And here's the daily to prove it. Relative strength line, what's it doing again? Hitting new lows. You got higher lows. 4 of them now. 1, 2, 3, 4. Yet you got 1, 2, 3, 4. Lower lows, I mean. So it's selling off the relative strength line while the pricing is trying to rally. And since the November lows, look at the relative strength line. Negative, 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 Johnny. Just horrible, horrible action. The daily, the IBD 85 shows you how bad it was. on Tuesday, Wednesday, Thursday, while the market was only down on Thursday. So that tells you how bad it is out there. Let's see how much time we have. I might need to wrap this up right now. I sure do. Okay, I'm going to go ahead and end it there. That's part one. Just to let you know, short term, we're still in an uptrend. Sub-intermediate term, we're in an uptrend. Intermediate term, we're in an uptrend going back to November on some of these indexes. And on the long term, we're still in a very heavy downtrend. Heavy downtrend. And with the lack of the IBD 100, IBD 85, 85 leading this rally, and with the NASDAQ now showing horrible negative divergence, I think it's time to go ahead and take a lot of profits if you haven't already. Have you been listening to me and you have taken profits recently? Excellent. Keep doing it. I still say as the market rallies, we got to take profits around 25, 50%. We have no choice. Aloha. Part 2, Part 3 is coming next.